What's up everybody, welcome back to the Art of Crypto, the birthplace of absolutely legendary gains. In this video, I am going to discuss exactly how you should be trading in the month of August. And if you have ever wondered like, hey, how do you catch the coins that are going to make a massive move? You know, stuff like ICP, which recently made a absolutely monster move, which I caught this in the private group. So if you were in the private group, congratulations, we brought the breakout from here. But enough of me shilling my group. This video is going to get into a step-by-step little process that you can follow in order to find the coins that are, you know, potentially about to pump. But before I get right into it, if you haven't already followed me on Twitter at _theartofcrypto, you're going to want to do so. Not only am I sharing the latest market updates, but I am also sharing this NFT play that I believe that you guys could keep an eye out for. This is a pretty new project, but I do believe that it has a pretty decent chance of becoming pretty big. So for those of you who are interested in, you know, NFT projects, you know, have a read on my Twitter. I will explain my thought process here. And if you want to join their Discord group, I will link it in the description below. So just check that out. So let's dive right into it. So first scenario that you're going to want to look for when determining which coin you want to enter is, firstly, you want to hop on to at least the 4-hourly chart. Now, preferably you want to do it on the daily chart, but you know, for most coins, I would actually suggest the 4-hourly. So what you want to do when you hop onto the 4-hourly, right? Let me just go to an absolutely random coin right now. So for example, just now we were looking at ICP, which again, we bought a break here. So what you want to look out for is a pattern that looks something like this, right? Something like a very, you know, a rounded bottom, right? This is what you call a rounded bottom. And if you followed my channel back in the early days, you know that I like to say that, hey, rounded bottoms pays the bills. So this is the first scenario that you want to look out for, right? Something that looks relatively flat. Basically, most coins should be in this stage right now. Now, there was one rounded bottom that I called to the private group recently, and that is COMP on comp, right? If you just take a look here, right, we have a smaller rounded bottom in a bigger rounded bottom. So basically you just want to look for charts like this, and basically pretty much every chart should, you know, play out something like this. So what you want to do is you want to look for, right, that is scenario number one, right? Scenario number two, and there are two ways that you can use to identify scenario number two. The first of which is going to be market structure, but I'm going to get into market structure later because it's more of a advanced topic. But right now, I'm going to get into the second condition that you can use, or rather an indicator that you can use in order to identify, you know, the second scenario, like the second condition basically. And what you're going to want to do is you want to go onto indicators and maybe look up 5 EMA, right? 5 EMA, right over here. And then you're going to want to modify the EMAs to select a 50, right? You're going to want at least a 50 EMA, a 100 period EMA, and a 200 period EMA. The reason why these numbers are important is because usually the 50 is used to identify a healthy trend, right? The 100 EMA is used to identify sort of like a medium trend, and the 200 period EMA is what you use to identify the, you know, a dynamic support and resistance for a long-term trend, which means basically the 200 is going to be the strongest and the 50 is, you know, it's going to be the weakest among the three, but it's still really strong. And if you don't already have a TradingView subscription, and if you want $30 off of your subscription, just head to the link in the description. There is a $30 off promo code. So once you bring up the EMAs, what you want to look for preferably is, at the moment, what I've got here, the purple line is a 200 EMA, the orange is the 100, and the 50 is this gray line right here. So what you want to do on the 4-hourly chart, again, everything is happening on the 4-hourly chart. I would not suggest going even lower, although preferably I would suggest doing this on the daily, but the 4-hourly definitely suffices. So back to the 4-hourly, you're going to want to look for two conditions to be met, right? The first of which is going to be for your 50 EMA to have crossed above the 200 EMA. So you can see that happens. The most recent example was over here, right? Where the 50 crosses above the 200. Again, this is an EMA. This is not an SMA. An SMA is a simple moving average. That is a different thing. Right now, we are using the EMAs, right? And the only difference between an SMA and an EMA is that an EMA places more weight on recent events. So basically what is going to happen with EMAs is that they're going to be able to react quicker to the markets. So if the market suddenly pump, you can see that the EMAs react pretty quickly. Whereas if I bring up an SMA right now, you can see that well, I know it looks really messy here, but this yellow line right here, this is an SMA, right? A 200 SMA. You can see that even though the 200 EMA started going up here, the SMA was slow to react. So you can argue that the SMAs is good for a long-term trend, while the EMAs are better for, more of a short-term trend. But in this case, we are going to be using the EMAs. As for some people who might ask, is the EMA better or is the SMA better? For me, I would prefer using the EMAs in this situation because it reacts quicker to market conditions, and you know how quickly crypto market conditions tend to change. So first condition, you're going to want to look for the 50 EMA to have crossed over the 200 EMA. And the second condition that you are going to want to look for is for the 200 EMA, right? For the price to retrace back to the 200 EMA and then hold it as support, right? So you can see, even though we wick down just a tiny bit to clear out the liquidity, we have managed to hold above the 200 EMA, and then the price just, it just pumps from there. So those are the two conditions that you want to look for to be met when you are trading rounded bottoms. Basically, the fact that the price has flipped above the 200 EMA as well as the 50 EMA, and even look for the 50 EMA for support, means that the trend has changed from bearish and to now bullish, right? And basically from here on out, as long as the price remains bullish, you're going to want to look for pullbacks to the EMAs in order to do your buying. So for example, if the price pulls back to the 50 EMA here, I could place a buy order and I could ride the trend. Of course, this is a very, very simplified process, but at the end of the day, most of the people watching this channel are beginners, and this is a very simple process to follow. Now, let me just give you another example, right? I'm literally, right? This is a random scroll here. I'm just going to scroll to something completely random. So you can see at the moment, TRB right here has fulfilled both the conditions where the 50 EMA has broke above, and then the price actually came down to test the 200 EMA and holds it as support. So in this next part right here, during this pullback to the 50 or the 100 EMA, this is where you would be buying. And basically, just think of EMAs as this way, right? If the price is below the EMAs, then a pullback, right? Again, a pullback during a downtrend means a pump, right? A pullback to the EMAs is where you short things, right? A pullback, see, short. You pull back, you short. You pull back, you short. You pull back, you short, right? But then now, because the price has already broken above the EMAs, and remember, this has not happened for pretty much 3 months, right? Almost 3 months. So now that the price is above the EMAs, as well as the 50 above the 200, and I'll explain why right now, why the 50 and the 200 have such a strong significance. So basically, if you go onto Investopedia or whatever, and you look up the term golden cross, right? The golden cross in trading rules simply mean when the 50 EMA crosses above the 200 EMA, this signifies the golden cross. This signifies that the trend is about to change. And, vice versa, the 50 crossing below the 200 is what you call a death cross. Doesn't sound particularly bullish, does it? So once the price flips above the EMAs, you are going to want to look for the EMAs as areas of value for, pullbacks when the price pulls back to the EMA, and then, that's where you buy. And as for the take profit, I will get into that in just a little bit. So this is just another example, right? Maybe we go to something else like VeChain. Okay, so you see 50 broke above and price came to retest the 200. So the next time it comes to retest either the 50, the 100 or the 200, I will buy at all 3 EMAs. So, and as for my stop loss, I would generally place it, 3 to 5% below the 200 EMA. Or below a previous swing low. So in this case, that would be right here, right below here, or maybe even right below here. So there are a few ways that you can set your stop loss. Again, if I get into too much depth in this video, then it's going to take a really long time. And if you've learned a thing or two in this video so far, it would help me so much if you could just drop a like button. It's a really small gesture, but it really helps me a lot, and it allows me to continue making content like this. So that is utilizing the EMAs as your entry and exit indicators, right? Again, stop loss right below the 200 or right below a swing low. And as for your entry, you're going to want to first wait for both of the conditions to be met first, and then use the EMAs as areas of value during pullbacks to buy into, right? If you notice here, notice how strongly the price got rejected off of all of these EMAs, right? Similarly, during this pullback, right, if price pulls back, there is a good chance that these EMAs are going to hold as support, just like how the EMAs held as resistance over here. So the second way that you could use this is to use market structure. Again, remember, so far we have covered, first thing you want to look for rounded bottoms, and then on those rounded bottoms, you're going to want to bring up the EMAs in order to determine whether or not it is bullish or whether or not you should be entering. So the second thing that you just want to keep in mind, and this gets into the take profit, right? How to take profit is basically you want to go up onto the daily chart preferably, and you just want to look for, if you've watched my videos or if you follow my channel for any amount of time, you know how I always like to say, as long as something is bullish, then we expect protected highs to get attacked. So for example, over here, this is going to be the next protected high on the daily chart. In fact, right here is a protected high. So for VeChain, in this particular example, we expect these two levels to get attacked as long as price were to remain bullish. So basically, your take profit zones is going to be at previous swing highs. And again, if you do not know what is a protected high, you are going to want to watch my most recent video that I did on Cardano ADA, right? You want to watch that because even though if you are not interested in ADA, I get into really in-depth, right? Even though you are not interested in ADA, I get into a lot of depth over there about how to identify if something is bullish or bearish and exactly how to identify where the price is going to reach for. Imagine if you knew at this point right here that the price would actually go up to attack all of these protected highs. And then no matter what, you could be confident that, you can just buy from there. The way you do that is first identifying the institutional order flow, whether you are bullish or bearish in terms of order flow. So make sure you go watch that previous video I did on ADA. In fact, you can even watch the video that I did on Solana yesterday if you wanted to, but I would recommend the ADA video. So back to what I was saying. As long as you remain bullish, you are going to want to expect all of these protected highs to get attacked. So basically, I could even move, another two protected highs right here. And at the moment, they are protected, but once they get attacked, then they are no longer protected. So these are going to be your take profit targets, basically. And again, notice how I am not on like the 1 hourly, I'm not on the 15-minute, I'm not on the 5-minute. Because honestly, if there's one thing that beginner traders need to change about their trading is to stop playing around on the lower time frames. It's not going to benefit you. I know you may be in love with the idea of, hey, if I'm trading on a 1 minute, then I get my profits, in a few minutes. And that is simply not the way trading works. When you are trading on such a low time frame, what you're trading against is the algorithms, right? And remember, there is this statistic that says about 70 to 80% of daily trading volume is actually done by algorithms and robots. So unless you're confident that you can beat these algorithms developed by professional quant developers, then please do not bother with anything lower than the 4 hourly chart, right? My sincere recommendation for a beginner, stick to the 4 hourly or the daily and above. The gains are going to come slower, quote unquote slower, but rather than catching 1 to 2% moves, you're going to be able to catch, a 200% move, for example, right? This is the benefit of trading on a higher time frame. You can picture where the price is going to reach for much easier. And not just that, it's just going to be a lot more stress-free, right? You don't have to look at the charts every day. Oh, is the price about to dump? Oh, the bearish news, is it going to dump? No, is it going to pump? Oh, should I take profit here? That's sort of an issue that you run into when you are trading on a lower time frame. There's a lot of panic involved, right? There's a lot of emotion involved. But when you trade on a higher time frame, you can be confident, hey, it might take 2, 3, 4 weeks, but I'm confident that the price is going to reach for these protected highs over here. And so I can just let the trade run. So in this case, you want to use the protected highs on the daily chart as your take profit. Now, if you are worried that these take profits are not going to hit, then, you could just set a trailing stop loss. And if you don't know what a trailing stop loss is, go Google it. I'm not going to answer it in this video. And again, you want to use DCA, right? You always want a DCA. You don't want to take profit all in one go. What you want to do is maybe you take 25% here, maybe you take 50% here, and you let the rest run, right? This is how the best traders in the world do it, right? They always scale in and they scale out. So always DCA, right? Again, right now, I'm just going to go to another random example, right? Again, all of these things were called in my private group. So if you find value in what I teach right now and you want to get an even more in-depth understanding, because again, right now, what I'm telling you guys is literally like a really simplified version of what I teach in the private Discord group. And if you have not already checked it out, then here is going to be a quick sneak peek. Over here, you're going to get access to a trading education where I lay down everything that I've learned over the years, and you are going to understand exactly, how to trade like the institutions, how to identify order flow, how to use like what things work and how to discard 90% of the things that don't work. So if you find value in this video, you are going to find way more value in the trading course that you're going to get access to over here. And as a bonus, you're going to get access to daily profitable trading setups where people are making profits literally every single day. And there have been multiple people in this Discord who have already made back their memberships in just a couple of trades. So if you're interested, make sure you head to the link in the description and sign up right now. So back to that back to a previous example. So, if we go back onto the 4-hourly chart, I'm just going to show you real time how I'm going to do this. So imagine if I did not know anything that happened over here, then this would be the point where the first condition is met, right? The 50 EMA goes up, but we do not get a test of the 200 EMA. However, as long as, the price has broke above the 200 EMA, generally it is pretty safe. It is pretty safe to use the EMAs as areas of value to add to your buy position during a pullback. So for example, as the price pulls back to the 50 EMA, again, this is on 4-hourly, right? At least trade on the 4-hourly, okay? I do not recommend anything lower than this. So as the price pulls back to the 50 EMA, this is where I would place my first buy. And, it did eventually play out. As for, again, take profit, we want to look for previous protected highs. So for example, this right here is a protected high. And if you want to identify if you want to learn how to identify protected highs, make sure you go watch my previous video on ADA, okay? I dive into pretty much in depth on that video. And again, just a very humble pitch. If you want to learn even more in depth, then you're going to want to check out the private Discord group. But anyways, so if we do buy here, then we expect these in fact, if we do buy here, right here, then we already have the next protected high, which we expect to get attacked as long as, the next swing high, this is not protected because we are bullish, right? And it's okay, I'm not going to get into highs and lows here, but we just expect previous swing highs to get attacked. So for example, as long as we remain bullish, then assuming that I did not know whatever that was happening here, I would have assumed that as long as we were bullish, we would attack these two highs right here, and we indeed did. So that is basically like a very simple rundown of how to trade on a how to trade round the bottoms, basically. Because round the bottoms, like, honestly, they are one of the easiest ways for you to make huge money in trading. Because the thing about round the bottoms, right, is they do absolutely nothing, right? They do absolutely nothing for the longest period of time, right? I'm just gonna give you an example. So maybe Solana. Okay, Solana doesn't particularly. Okay, not really Solana. Maybe, let's see if we can find an example of a textbook around the bottom that I can show you. Yeah, so for example, right here, Litecoin, this still has not done anything yet. So round the bottoms, they do absolutely nothing for the longest period of time. So basically from this period, for about 74 days, the price has just, bounced around this range and it just did nothing, right? But then all of a sudden, they will absolutely explode, right? I'm not saying that Litecoin is going to go to $500, but I'm just painting the picture for you. So for example, if we go onto ICP, for example, see, it does nothing for the longest period of time and a bam, right? This is the beauty of round the bottoms, and that's why you try to catch these EMA pullbacks, right? Notice, again, I'm going to give you another example on ICP, right? Break up above the EMAs. Oh, not at this point yet, right? So only recently has it broke out above the EMAs. And again, this is why I say that while I use an institutional method of trading and I use market structure more than anything else, for you beginners out here, it would be best if I systematize it into a, step-by-step sort of system where you could follow, you could look for conditions to be met and then just follow them. So in this case, I don't actually use the EMAs, by the way. Like, I use it like 1 out of maybe 200 trades that I take. But for beginners, EMAs, right? Unlike 99% of the indicators out there, EMAs are actually a thing. So at this moment in time, what I would do with ICP is I would look for a pullback to the EMAs on the on the 4-hourly chart, and that is where I would enter. And as for the take profit, I would expect, as long as we are bullish, right, as long as we do not break below the 200 EMA and, turn the 200 EMA from support and turn it into resistance, then I expect previous highs to get attacked. So for example, this high right here, I expect to get attacked. Over here, I expect to get attacked. Over here, I expect to get attacked. Basically, what I mean by attacked is price is going to reach for these prices. So expect the price to attack it as long as you remain bullish. Now, there are a few disclaimers that I must add to this, strategy, if you would call it, and that is that this strategy, just like how when you are in a, bearish scenario, for example, let's use Adam for example, this strategy, right, that I'm teaching you only works as long as the price remains bullish, okay? As long as the order flow remains bullish. So if you go onto the ADA video, for example, then you would know how to identify when you are bullish on an institutional order flow. Although that is just really the surface. If you want to learn like deeper into how to identify this, then head over to the private Discord group. But I still do provide a lot of value for free. So the disclaimer is that this only works as long as order flow remains bullish. It's not going to work if the price breaks below the 200 EMA, comes back up and takes it as resistance, right? You flip support into resistance, then this does not apply anymore. In fact, you have to do the opposite, where you short the pullbacks to the EMAs rather than buy the pullbacks to the EMAs. Because why would you buy in the resistance, right? So again, while I have given you a step-by-step system, you are still going to want to take it subjectively, right? Market conditions change all the time, and so you have to adapt to current market conditions. And if you've watched until this point so far, I really want to know who are the real ones who've managed to stay here for about 15 minutes while everyone is watching Netflix or whatever, right? If you're still here, I want you to comment down in the comment section, rounded bottoms pays the bills. I know it's pretty long, but it will help you cement the fact of how, but just remember this one thing, right? Rounded bottoms pays the bills. If you can get the bottom of the rounded bottom where it's doing absolutely nothing, and when the trend is starting to change, then you're going to catch the majority of the move, right? And in fact, if you stay until this point so far, I will add another way for you to sort of do a trading stop loss. So for example, let's say you buy at the 50 EMA and the 100 and the 200. Again, just like how you would DCA out of your trade on take profits, you want to DCA into your trade as well. For example, if you had $1,000 to play with, I would maybe buy $250 here at the 50. I would maybe buy another $250 worth of whatever coin at the 100, and I would buy 500 worth at the 200, right? Again, just like how you do not go all in on one trade, you do not go all out on one take peak, like one take profit level, okay? So in this case, the other way that you could use to trail your stop loss basically is, let's say the price continues to pump here. So what you do is you move your stop loss. Let's say if the price gets to, let's say $17, right? I'm not saying it will, but assuming, like, let's say the price gets to $17, then the 200 EMA would be moving like this, right? And eventually, let's say you entered around here, right? The 200 EMA will eventually move above your entry. When it does, right, you just sort of move your stop loss, right, to trail it below the 200 EMA. And that's sort of how you trail a stop loss. And now I am not sure if there are things or aspects about this strategy that I have not covered. In fact, I'm pretty sure I haven't covered everything, but just right off the top of my head, these are the things that you want to keep in mind. And these are the things that, I've taught you how to take profit. I've taught you how to use your stop loss. I've taught you how to trail your stop loss. I've taught you what are the two conditions that must be met in order for you to enter into a coin. And using the EMAs on the 4 hourly and above, you can use it to identify trend reversals, right? At the moment, this is a bullish trend, although EMAs is, somewhat of a lagging indicator, because I already identified that we were bullish like 2 weeks ago, basically. If you watch my videos from, a week or two ago, I was already saying, hey, don't short, right? Don't short. We are bullish. And again, if you want to learn how to do that, private Discord group. And the last point that I wanted to add is by using this thing called CoinMarketCal. Okay, you want to go to coinmarketcal.com. Now, this is a news website, and this is what you use to identify which coins have news coming out, because you always want to, crypto is, things sort of pump and dump based on hype, basically, right? People like retail, right? The herd, basically. Pretty much every beginner is going to be looking at news and be like, oh, Ethereum London hard fork is happening. So, because this news is bullish, we have to buy, right? You buy because it's bullish news. And trust me, I know 90% of you probably think this way, and there's nothing wrong with thinking that way. Again, there's nothing wrong with, trading based on the news, but I do not want you to base your trading solely off news, right? Because doing so, if you don't know what you're doing, chances are you're just going to get wrecked. So what you want to do after you go onto CoinMarketCal, and again, this is to determine what coins you should be focusing on, at least in the near term. So what you are going to want to do is you want to go to this category here, highlights, right? And you want to click on that, and you want to look for the coins that, have a lot of plus votes. And you want to look for basically, any coin on this list right here. You can show more as well. But, stuff that is significant, stuff that is trending, stuff that is hot, right? That means that they have pretty big news coming out. And you want to focus on these coins because there is a saying that buy the rumors and sell the news, right? Again, buy the rumor, sell the news. So what you want to do is you want to look for events that are at least, maybe a week, 2 weeks, maybe 3 weeks out. And you want to start building positions on those coins, right? You want to focus on those coins, and you're going to want to hold it for like 1, 2, 3 weeks. Up till the event. And what you want to do during the event is you're likely going to want to start selling because, what people do is, the reason why the phrase Biden rumor, sell the news exists is because people do, it's a thing. So this is how you use news events, by the way. It is not to because it is a mainnet launch, I'm going to be buying this on 16th of August. No, that's not how you use this. How you use this is, again, this is Stack OS, right? It's 16 August. So by the time I'm posting this, that's a week away. So what you want to do is you don't want to buy on the day itself. What you want to buy, how you want to be using this piece of news is to be buying before the piece of news happens. For instance, right? Just, for instance, this is how I would do it, right? I would use the news to determine which coins to focus on, but then I will use technical analysis to identify where I will enter. So in this case, I will actually mark down this level right here, and I would buy the breakout of this falling wedge right here and to catch the move to the upside, okay? This is not saying that some of you out there say technical analysis is it's useless in the crypto market. Well, yeah, that's because you don't know what you're doing. I'm sorry to say that, but just because you don't know what you're doing and you're failing with technical analysis doesn't mean that it doesn't work. You gotta bring the best of both worlds, right? You use fundamental analysis to determine what coins to focus on, and then you use technical analysis to narrow down your entry point. And again, you can use that same system with the EMAs, and you're just going to buy, right? You're just going to buy and hold until the event, because chances are leading up to the event, there's going to be hype and there's going to be news, and you can just do your thing, right? And ride the pump. And just before I close this video, I just needed to say, right, market conditions are always changing. So you have to be able to adapt to the situation. And again, if you've watched until this point so far, you have learned so much, and you are probably ahead of 90% of other people out there. So big congratulations to you. And again, I'm not trying to overly promote the private group, but if you appreciate what I do, if you think that I'm right a lot of the time and you think that I know what I'm doing, then you're going to learn so much more in the private Discord group. So make sure you at least check it out. And with that said, my friend, thank you for watching to this point. I hope you found value in this video. And with that said, my friend, may the gains be with you, and peace.